there a way this market can keep going and going and going? It doesn't make sense. How could it keep going like this? And is there a potential reason that it could keep going up? Well, as crazy as it sounds, Bloomberg thinks yes. Now, I'm going to provide what Bloomberg said, which is quite bizarre. That is the opposite of what we've heard about in 2023. And then I'm going to get into some specific stocks that could potentially benefit from this. This is wild. So as usual, we're going to go to ehack.com. ehack.com, household savings and pricing power. What do we have here? Stocks have room to run with consumers relaxed about savings. Wait, that's weird because we've regularly been hearing about excess savings running out. Well, Bloomberg has three responses to that argument. They say, number one, by some measures, excess savings remain around $900 billion. And remember, before the pandemic, we all had zero excess savings. So any dollar of excess savings we have today is extra money. Now, the savings rate is just 4.1% today. But Bloomberg actually flips this argument on its head. See, a lot of bears have been looking at this, and I've actually seen it as a bearish argument as well, suggesting, man, that savings rate is low, or people stressed out with all-time high levels of debt. Bloomberg argues, well, there is a chance people could just have more cash available and then save less as a result of that. In other words, spend more of their new money coming in because they've got plenty. Now, so let's be clear about this. I feel like I'm starting to choke because it's kind of like, whoa. That is going to piss off a lot of people. Yeah, especially people making probably in the bottom 40 to 50% threshold of incomes. Absolutely. That is going to piss a lot of people off who are frustrated at, quite frankly, higher restaurant costs and grocery costs and things costs. Everything's more expensive. But just because people are frustrated by that, does that change the fact that maybe that upper 60% has more cash than they've ever had before? It's once again welcome to America, the place where the rich get richer. In fact, specifically targeting the rich, Bloomberg provides rationale number 3. Homeowners are in particularly good shape, with household wealth in real estate assets at a record. And so here I responded and said, wow, this is actually a really interesting perspective because it's the opposite of what we saw in 2023. In 2023, we were all on about, student loan repayments are going to come due, household savings will run out, and consumers will spend, consumer spending will essentially crash. Yet that's flipped. Now we have upper echelons with more cash, which I argued when I covered Nike's earnings that that's actually going to potentially lead wealthier consumers to see benefits from their stocks and real estates going up, leading to more spending where wealthier consumers spend. But the question is, where do wealthier consumers spend? Well, when we look at ehack.com, I actually broke this down in my opinion. In my opinion, wealthier consumers, homeowners, remember, homeowners have like 20 times the net worth of a tenant. We covered this many times before on the YouTube channel, but you could also just click on the link that I have right here, which brings you to a piece that actually right now is a little bit old. Oh, it's a New York Times Magazine piece. Darn it. It's behind a paywall. But anyway, it essentially just breaks down household net worth comparisons. And I know some people don't like the NYT, but their data is probably still accurate in this realm. I've seen this corroborated in other places as well. So the question now is, where do homeowners spend money versus maybe the bottom 40 or 50% who don't own homes? Remember, about 42% of America rents. Now, there are also some higher income individuals who rent. So let's be clear about that. But anyway, look at this. Home improvement, in my opinion, this is all my opinion. In my opinion, homeowners or people with substantially more net worth today are going to spend money on home improvement. So think Lowe's, Home Depot. Think solar, Enphase, SolarEdge, Tesla. Think cars, Rivian, Tesla. Think Apple products. Think business startups. Think Ubiquity. Think restoration hardware for rip-off furniture with massive 40% gross margins. I could hate the product, but like the stock. See, I know people are like, oh, Kevin, you recommended a firm. I did. Back in the bull run, I'm like, I hate buy now, pay later. I don't think you should ever use it. But if you're going to use it, it's there. And I thought the stock was great during non-recessionary times. And then, of course, I sold it going into a recessionary time. Now it's booming again as we're potentially coming out of a recessionary time, right? But the point is, the point here is specifically around you can like restoration hardware stock. And you could like 40% margins on rip-off furniture and not want to buy the product. Don't get me wrong, I walk into Restoration Hardware and I look at the furniture and I touch it, I feel it, I go, these bastards are brilliant. They sell lumber in funky designs to people at rip-off prices. You spend 10 grand on a desk, they make $4,000. Come on, man. That's the business I want to run. I want to sell rip-off furniture. Then again, see, I'd rather have a win-win business that doesn't rip people off. But that's the thing. Restoration Hardware has created this mentality in buyers that you're not actually getting ripped off, that you're getting quality. Right. Because spending $100 on a desk versus $10,000 on a desk clearly means you're getting 100x the quality. No, obviously not. Anyway, read their last earnings call. It's fantastic. RVs, pets, all of these things are things that homeowners spend money on. Notice what people don't spend money on when they're homeowners. You might be surprised to hear it, but NVIDIA chips, clothing, staples like Costco, Walmart, Target, none of those things benefit from rich people having more money. And when I say rich, people get offended by that. I just mean wealthier. Okay, so like if you're not in the bottom 40%, you're wealthier than that other 40%, but that doesn't make you rich, right? Okay, whatever, semantics. So I wrote some other considerations here at ehack.com. One of the most important ones that I saw is that Carnival Cruise Line sees stable demand in Q4. Now, they're still underperforming inflation, but this is a leading indicator of consumers being willing to spend more money. This is incredibly important and highly understated. I am looking for bear arguments every single day, and I will provide them to you. Again, the biggest bear arguments right now. I'm not trying to be perma bull. Like I'm a big fan of what came first, the chicken or the egg. Well, what came first was my analysis, and then I allocated to tech and chips. Now I'm probably misbalanced heavily to tech, chips, and energy, actually, if you include Enphase. That means I'm underweight Restoration Hardware, RVs, and pets, and including home improvement. And I think that actually deserves further evaluation. You know, maybe I'm missing an opportunity in some of those sectors, and I'm always trying to look ahead. Like, I'm not trying to see what did well last year. I'm trying to think about what's going to do well going forward. And I personally don't see a real estate crash. I mean, look, we get an inventory spike every single spring, but who says this inventory spike this year is going to be substantially more dramatic than any prior years? I do think there is going to be excess inventory this spring. I think there is inventory was low in October and November. I could buy deals all day long. Inventory is like non-existent in around Christmas. I'm like, man, I was hoping to see some more distressed deals, but they will come. Just wait until January and Feb. They'll start flooding the markets again. It's very normal. The real estate market is surprisingly emotional in the short term. If you could graph it, it would look just like the stock market. It's pretty remarkable, but you can't graph it. So anyway, I find all of this incredibly fascinating because it's a perspective that even as people who are more bullishly positioned, I have not considered this idea of household net worth potentially actually leading to the next bull cycle. But beyond this, consider this. What happens when we get back to a refinancing or HELOC cycle? I mean, consider that people who owned real estate have probably paid down principal of about, let's say, $1,000 a month. So that's $36,000 of principal pay down over the last 3 years. Well, that's extra money they could tap into if they want to go refinance. Where does that money go? Well, in my opinion, stocks, boats, RVs, home improvement. I mean, do your own research. Like, where do people spend money, right? And I'll research this as well, and I'll post more updates on ehack.com, free forever. What's not free forever, you already know this. I've got a bunch of new lectures dropping for the gold courses on building your wealth over at meetkevin.com. And we're going to raise the price January 1 going into 2024. So if you've got any questions, email us at staff@meetkevin.com. But eHack is sort of our free news platform. And really, it has been such an incredible tool for me just to be able to refer to some of my other thoughts. Like, I love the fact that I could write a piece today and then I could go, oh yeah, what did I say about Nike? Click, boom. Here's exactly what I wrote about Nike. It's right there. It's like the coolest database ever of financial research. And I don't even have to click around. I mean, I guess I did just click a link, but it's all technically one giant page. I wonder when that's actually going to create loading issues. So far it hasn't, maybe because it's cached and I have to clear the cache when I update. That's okay. So anyway, yeah, hey, thank you. Thank you so much for all of your support. I love y'all. And boy, I might be mispositioned here, but this is very interesting. And I'm looking for more bearish arguments. Oh yeah, quickly. What are the bearish arguments? Number one, 10-2 yield curve. Okay, I always want to give the bearish side as little of one. And I'm concerned when the bears are flip-flopping, that's usually a sign of the top. It makes me nervous. You know, Mike Wilson again, he always becomes bullish when you're at the top. He did it this summer too, you know, in July. We're 45 basis points inverted. Q1 earnings around the corner. I don't know, man. If guidance is bad, it's gonna suck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.